Hi, in this video we're talking about oil and the outlook for 2026. Basically, this will be an update to my 2025 forecast. We'll be working based on already existing publications, and I'll make adjustments and comments on what to pay attention to and where the important levels are for us and for our trading. So let's start with the latest oil post in my Telegram channel. By the way, if you haven't subscribed yet, the link is below this video. At that time, we were looking at Brent and WTI with targets for an update by the end of the year. The timing didn't work out, but the scenario itself remains the same. That is, I still maintain all my expectations, and the movement structure currently matches the previous ones completely. Let me remind you that the base scenario for oil is a diagonal with the development of 5 downward moves in the form of threes. Given the noticeable slowdown in dynamics in 2025 at the end of the year, we're not talking about a deep drop, but rather a formal update of the minimum, and nothing more. The key benchmarks in this scenario are 58 and 44 for Brent and 54 and 80 for WTI. And what's most interesting is that today, on January 16th, 2026, it's quite telling, but just a few days ago, if I'm not mistaken, it was January 14th, Trump publicly stated that he would like to see oil around 53. This fits well with the current technical picture, especially since Trump tends to achieve his goals, but does so in the short term. That's exactly how I see it. In other words, the goal will be formally achieved, but not for long. And after that, this whole cycle can be completed. But moving on to the local movement structure, to understand where and when the final decline might form, let's take a look at the 8-hour chart. Given the current picture, there is only one move left in the decline, which structurally should form a corrective three-wave pattern. It's all right in front of you. The first part of this move, either wave A or wave W, if the structure changes and becomes more complex, is already complete. And at the moment, the market is in a correction phase. So this is either wave B or wave X. The target range for the corrective rise is 69.51. That's 50% of the entire decline according to Fibonacci, and the 62% level. That's 72.07. At the same time, it's important to note a key condition. Holding above $72 per barrel is unacceptable because in that case, the current forecast will be invalidated. It is precisely within this range that we will monitor the formation of the next move, which will already be downward. Here, I want to add that the difference between the WXO and ABC models lies only in how long the current correction will take to form. Essentially, the chart shows you the option of the X wave, the connecting part, which is short-lived and will be completed within a month, 2 at most. If, however, wave B is forming, then most likely we will spend the first half of the year consolidating up to 72 from the current level. And only then, in the second half of 26, will we see the very decline we need. As for the overall picture, so that we move forward step by step together, the current corrective growth, once completed, is highly likely to lead to the very final decline we are waiting for, and to a renewal of the minimum levels. Let me remind you that for Brent, the maximum growth target is 72.08. That is, the first part that needs to be fulfilled. And the target level for the decline is 58.79. This stage will be the final part of the considered diagonal and a key reference point for further actions. Which actions? Let's look at the next slide. In turn, the completion of the entire corrective cycle, that is, the entire decline since 2022, is expected in 2026. We know this well, and I anticipate your comments. We were expecting it in the 25th, it took a bit longer, but that took into account the change in the model. However, all this will become the starting point for a global reversal and the trajectory, that is, approximate targets, you can see on the chart. That is, further after the cycle is completed. In terms of the nature of the dynamics, I expect something similar to that in metals. That is a full-fledged reversal with the goal of updating the maximum. It is this moment that we see as a transition to a new long-term phase of market movement. Just in case, I showed the volume levels on the chart, 2 key marks that are important for us. That is, 55.20 is the main one, where most likely it will end in this area. But again, in case of a failure, in case of some extraordinary events on the world stage, we might see a short-term quick move a bit lower. Thus, as the situation in the oil market develops and new news factors emerge, I will supplement and adjust the existing markup. I've been doing this since 23 and quite successfully. Subscribers can track all updates in my Telegram channel. So accordingly, if you're not subscribed and you want these updates and to stay informed, subscribe. The link is below this video. This was Dmitry Abramenko with you. Thank you and see you next time. Bye.